Hi, this is Bill Burns with the Redbud Group and Keller Williams in South Park.
And I'm Terry Whitesell with Fairway Mortgage. And Bill and I are here today with some pointers on credit. I know, Bill, you and I have talked a good bit, and in your job as a realtor, you get a lot of questions from borrowers.
That's right.
Asking about, how does my credit impact my ability to get a loan? So I thought it might be good to share some of those questions with our viewers today.
Okay, yeah, let me take a couple of the most common questions, Terry, and maybe we could start with if I don't have credit, how do I go about getting it?
So a good question. It's better to have no credit than to have bad credit. So if you have no credit, that doesn't mean that you're disqualified from a loan. It means they're going to look at some other factors. Make sure you pay alternative forms of credit on time. They'll ask for multiple forms of that, like your cell phone bill, your power bill if you rent, your cable bill, your rent, those things. They'll look for 12-month histories on those. The way to start building credit from there is to take a credit card, use it responsibly, use it wisely, and make sure your payments are on time. Keep your balances low. They want to see about a 25% balance to limit ratio on your credit cards to keep your score moving in the right direction.
Okay, great. Thanks, Terry. How would I go about getting a loan if I have good credit and my spouse doesn't?
So the best part of that question is there is good credit involved, but on a loan, they're going to look at both borrowers' credit scores.
Okay.
And unfortunately, they take the lower of the two scores. The way they look at your scores, they rank your scores from high to low. Each borrower will hopefully have 3 scores, and they rank them from high to low. And then they use the middle score for each borrower. They're going to use the lower of the 2 middle scores. So if you have a spouse or a partner that is lower, then you'll want to try to do some things to try to build that credit score up. Obviously, again, it's take a credit card, maybe look at the balance to ratio those limits and see if you can pay it down some to get that score to bump up a little bit.
Okay, great. And how does your credit score affect even getting a mortgage?
So there's different programs really for different credit scores. If you were to look at some of the government loans like FHA, USDA, they will allow lower credit scores. The rate is not impacted as much by credit scores on those types of loans. If you were looking at a conventional loan, the minimum score, while it's 620 on a conventional loan, if you have a lower credit score, you're going to have a higher rate and you're going to have higher monthly mortgage insurance. So the way it impacts it, if you have lower credit, you're going to have a higher payment, which may impact the amount that you can qualify for.
Okay, thanks, Terry. And if you have any other questions that you'd like us to answer, feel free to reply to this video and let us know what topics you'd like us to cover on the next one. We'll be happy to address them for you. Thanks again. This is Bill Burns with Keller Williams, South Park, and the Redbud Group.
And Terry Whitesell with Fairway Mortgage.